I'm Kyle Malnati, your host of the Calibrate Real Estate Podcast. At Calibrate, we exist to help people create generational wealth through real estate. My personal mission is to encourage, empower, and educate you by sharing best practices from business leaders that are proven winners. Broadcasting from the Mile High City, thank you for tuning in to episode 150 of the Calibrate Real Estate Podcast, a huge milestone. And we have an epic guest today. We've got Ted Thomas. Ted is joining us from Florida today. We're going to have a very interesting discussion about the tax lien world. Ted, as I've gotten to know him here as we're prepping for our show, is a Harvard Business School graduate, has been in a space that I think a lot of people hear about in real estate, but don't really know a lot about and don't know what to do with. And so, Ted, welcome to our show.
Glad to be here.
Ted, it's going to be super fun to have this discussion about tax lien certificates. Could you just explain to our audience a little bit about how that works and why there are so many maybe misconceptions and misunderstandings about the tax lien world?
Well, it's not a difficult business. It's really an easy one to start with, but it's nationwide. Taxes always take place on real estate. So your audience, primarily real estate people. So you're going to have a property tax on the homes. You're going to have it on office buildings downtown, ranches, farms, all those things. They all have a tax. So in the course of the year, stuff happens to people. So some people don't get their tax paid. If they don't get it paid, the local government has a crisis on their hand, a big crisis, because those property taxes pay for the police, the fire department, the schools, the roads, all those things are paid for with property tax. So what the states do, for example, you're in Colorado. In Colorado, they're going to issue what they call a tax lien certificate. So they can't see me, but I'm just holding up a piece of paper like the one that you take out of your computer. And that's what a tax lien certificate is. It's just a piece of paper. And that piece of paper is very valuable because whoever owns that piece of paper now controls the property, not the owner, not the bank, but the person that holds that tax certificate, because the government always has the absolute priority lien on the property. So a priority lien is ahead of the mortgage. It's ahead of the IRS. It's ahead of any lien. And if you own that lien, you now control the property. So the property can't be sold, can't be remortgaged, can't be refinanced. Nothing can happen until that lien is paid. So now you control the property. So half of the states sell those tax lien certificates. The other half of the states are not very benevolent. You see, a tax lien state is benevolent because they don't want the property. They're just slapping the property owner's hand and saying, look, you haven't paid your tax. We're going to put a tax lien on it. But the other states, California, New York, states like that,